Hey everyone, welcome to another homework walkthrough. This is a statement of cash flows walkthrough under the indirect method, and this is a super valuable walkthrough. It's what most students struggle with. It's one of the more difficult puzzles in financial accounting is putting together a statement of cash flows, especially under the indirect method, uh, because it takes a lot of implied items from the balance sheet and we input it into the statement of cash flows. This is a part of Chapter 14 homework for Cengage's financial accounting. And we are given this problem. We have a statement of cash flows under the indirect method. We have a balance sheet. No, we have the current year is 2019. December 2018 is the prior year. And so we have the beginning cash, the ending cash, changes in our current assets, changes in long-term assets, and changes in capital. We are and liabilities, and we're given the net income. We're given the dividends. It tells us what the long-term assets acquired and sold were, and the common stock issued, and um, we have to fill out a statement of cash flows. So, because this is a puzzle, we have to start with what we know. And we know that the beginning cash was 47,940. And the ending cash balance, 70,720. Because that's given to us in our balance sheet. The first line in cash flows for operating activities is net income under the indirect method. And then we work backwards, making cash adjustments to what was the actual cash flow from operations. And so our net income was 141,680. And adjustments to reconcile net income to cash flows used for operating activities. Depreciation is going to be one because that's a non-cash expense. So depreciation is included in net income, but that doesn't actually cost the company any cash. And then if we take a look at there were no disposals of equipment during the year, investments were sold for 91,800 in cash. And if we look at our beginning and ending investments, we need to know whether this was a gain or a loss on sale of investments. And it's a non-operating cash flow. Investing activities are operating cash flows. So for investing activities, we're going to record the cash received for this. For the operating activities, we need to adjust our net income to be the non-cash portion. And so what we will do first is we will take our investments balance at the beginning of the year. It was 102,000. And then we sold the investments for 91,800. And that's going to be at a loss because that's less cash than they were carried on the books. See, it was on the books here for 102,000 for investments. And then we sold it for 91,800. That's 10,200 in loss. And that loss was included in net income, but it's not related to operating cash flows. So we are going to back that out. Loss on sale of investments. In our investing activities, we're going to be cash received from sale of investments. It's just total. In investing cash flows activities, we simply have to take the 91,800. And for depreciation expense, you can see how much accumulated depreciation increased throughout the year. It said equipment and land were acquired for cash. There were no disposals of equipment during the current year. So accumulated depreciation only went up because there were no disposals. If there was a disposal, they would have retired the asset. It would have reduced accumulated depreciation, but we know that that did not happen. So we know 84,320 minus 99,110. Depreciation during the year was 14,790. And that's going to increase operating. And note that use the minus sign to indicate cash outflows, cash payments, decreases in cash, or any negative adjustments. These two are positive adjustments. Depreciation expense increases our operating cash flow because it's a non-cash expense. It increases the cash that we have. Loss on sale of investments increases our operating cash flow because it increases the net income from operations. Whereas if it was a gain, we would have to reduce it because that would be net income not attributable to operating cash flows. Now we're going to go over each of the current assets and liabilities and see how these impact our operating cash flows. And accounts receivable increased. So we'll say increase in accounts receivable. And if accounts receivable increase, that means that we did not receive the cash. The customers still owe us the cash. And so that's going to reduce our operating cash flow. So 207,230 minus 188,190 is 19,040, and that's going to be negative because it's a current asset that's increasing, and that reduces our operating cash flows. Inventories also increased, and increasing inventory costs cash. So if we take 298,520 minus 289,850, we get 8,670. And then investments, land, equipment, those are non-current assets. Those will show up in the investing portion of the investing cash flows of the statement of cash flows. So now we have our liabilities section, and accounts payable increased. That increases operating cash flows because that's more debt that we didn't pay. Increase in accounts payable, and the increase was 11,560. And that increases our operating cash flow. And then we also had accrued expenses. They also increased. That's going to be, we have to record that as increase in accrued expenses payable. And that's also going to be a positive number because it increases our operating cash flows. Because again, it's expenses that we haven't paid. They're expenses that reduced our net income. Because this is the indirect method. We take our net income and then we back out any changes to cash flow because that didn't affect cash or that affected cash, and and these expenses, this increase, this $3,740, that was a real expense in the last year, but we didn't actually pay any cash for it, and so we need to show more cash flow for it. And so we have net cash flows from operating activities, and we have to add it all up. So we take our net income plus depreciation expense minus our increase in accounts receivable, minus our increase in inventory. We had to add back our loss on the sale of investments, and then we add the increase in our accrued liabilities. And we get 154,260. Now we have to go on to the investing portion. And equipment and land were acquired for cash. That means it was a cash outflow. And so we need to show that on our investing portion. And we purchased land and purchased equipment. So we have cash paid for purchases of land and cash paid for purchases of equipment. These are going to show up as negative numbers because they're cash outflows. And our historical cost shows up on the balance sheet. Land was acquired, so 295,800 was for land. And for purchases of equipment, we have to, because we know no equipment was disposed of, and so equipment only went up, and the historical cost goes up by the amount of the acquisitions of equipment, and it was all acquired for cash. So we can take this year's equipment balance minus last year's equipment balance, and we get $80,580 cash outflows for purchases of equipment. And then our cash outflows, it'd be net cash flows used for investing activities if it's an outflow, minus 2. We get 284,580. And this is going to show as a negative number because it's a net cash outflow or net cash used in operating activities. We have financing income. Now we have net cash flows from or used for financing activities. And during the year, we know that common stock was issued for cash and there was dividends declared. And so we know that there were dividends declared. This is the debit to retained earnings, but note that it only shows up on the statement of cash flows when the dividends are paid, not when the dividends are declared. And so our dividends payable balance also changed throughout the year. This didn't appear in operating cash flows, even though it's a current liability, because it's not related to operating cash flows. It's a financing cash flow. And so we'll start with the dividends, cash paid for dividends. And we had 102,000 in declared dividends during the year. And we know that we paid out the dividends that were payable last year, so we can add 20,400 and then we subtract 25,500 and we get 96,900. That's the dividends that we paid during the year, right? We take the dividends that we declared, we add the dividends payable from last year, we subtract the dividends that are still outstanding as of the period date this year, as of the end of the year. That's how we determine the net cash flows from or used for dividends, cash paid for dividends. And it's going to be a negative number because cash is going down for dividends. We also had cash received from sale of common stock. And also just another note on the dividends. If we just took the change in dividends payable going up, so dividends payable went up by $5,100 in the year. That means our cash went up because we owe more in dividends. And initially, the dividends payable would have been negative 102,000. And then that number increased to, because it's a negative number, right? It increased from negative 102,000 to negative 96,900. On to common stock. As part of our common stock, we issued common stock for par, and then we have paid in capital in excess of par common stock. It's really easy to miss paid in capital in excess of par because it's not, right? It's not directly in the common stock amount, but we issued 202,000 minus 102,000, 100,000 shares of common stock at $1 par, and then additional paid in capital increased from 354,000 minus 204,000 is 150,000. Plus we had the 100,000 and $1 par. Each share went for $2.50. We issued 100,000 shares. That's $250,000 cash inflows, cash received from the sale of common stock. And then we have net cash flows from financing activities. And then we have net increase in cash throughout the year because we had cash balance of 47,900, 70,720. Oh, sorry, ending balance, right? So that's going to be an increase. And what we have to do is we have to make sure that the cash flow statement ties out. Just make sure that you didn't miss anything. And so what we'll do is we will add all of our numbers up. So we have operating cash flows of 154, 260 minus 284, 580 for investing activities, and then we add back 153,100, and we get 22,780 net increase in cash because it's a positive number. Then we take this year, the ending balance minus the beginning balance. And as you can see, it's the same number. So we know that we did not miss any activities. So that's all for this homework example. Thank you everybody for following along. Good luck with your homework, and please remember to like and subscribe if you find these videos helpful, so you can make sure that you're getting this content as soon as you can. Thanks.